Hi, welcome again to another edition of Market Analysis for today, March 24, on a Monday of 2025. I'm Gio Benacourt, and this is a recording done half an hour after the market opened. Okay, I'm just doing different scenarios and see how that goes. Well, let's just begin the week by speaking about the so-called Liberation Day of President Trump's, which is approaching fast, and the stock market is at the mercy of every twist and turn that creates. So April 2nd is the deadline when U.S. reciprocal tariffs are due to kick in, but there is already uncertainty about what will actually happen. The market is likely to move with any developments on what levies may or may not come into force. It's not investors' first rodeo. They're now used to the tariff deadline cycle. In fact, that's already happening. Several factor-specific tariffs look set to be omitted, including those on autos, pharmaceuticals, and semiconductors. The Wall Street Journal reported Sunday that may be more of a postponement than anything else. Reciprocal tariffs on other countries could also be more targeted than previously feared. So they're going to be more focused, more directed to certain areas. Now, while that may provide a boost for stocks, it does nothing to ease the mounting uncertainty surrounding U.S. trade policy. Companies and consumers are alike will find it very hard to commit to investments in this climate. And on that front, the Conference Board's Consumer Confidence Index tomorrow will provide insight into just how much impact tariff headlines are having. In February, the index posted its biggest drop since August of 2021. Another sizable drop could stop the market's nascent rally in tracks. Now, Dollar Tree earnings Wednesday may also be worth watching for further evidence of the health of more price-conscious consumers. And then finally, the Federal Reserve preferred inflation metric on Friday, the PCE, could also be a catalyst for stocks this week. Now, economists expect the core PCE index to rise 2.7% in February, up from 2.6% in January. So, if that's the case, obviously stocks are going to be hurt, and therefore meaning that interest might just go up rather than down, the interest rates. So let's see what will happen by that time. But the data will be useful, but what the investors really want is clarity when it comes to tariffs in terms of trade policy. And beyond April 2nd, it's hard to imagine the market ever feeling certain about what comes next, and that means volatility may be here to stay for the long term. And with that being said, volatility has made a statement today. It has opened, the Nasdaq has opened gap up. Now, this could be also one reason, because obviously the bid when the market opened in London, that's where the first bids came in, the strongest bids, a big sharp came in, and so that's where the market opened with this nice gap up. So we want to, obviously we're seeing that the direction of the gap is continuing to go higher, right? That's what we're seeing so far. Now, can we speculate that we have created a top so far around this level and we're retracing this amount now that we opened half an hour already, right? So could this be just profit taken? Are we strongly in a reversal? Well, let's just go down to about a 5-minute chart and see what that fluctuation has been. Adding the candles, so 5, 10, 15, 20, 25, 30 minutes. And so from where the market opened, when the market opened at 8:30 here, so the market had made a swing higher, then it retraced, right? And from that retracement created a bottom of the lower Bollinger Band, and it rallied higher, continuing showing the continuation of the gap move. And then we came in and made that top, the high, around the high is 20,336. From this high, have we retraced from the low that we made to the high that we made? Come on, why is this not? gosh. That's why. Let me see, contracted, okay. So now from this low, which is a double bottom in reality, to this high, the market, what has the market done? Let's just extend it. All right, so the market has passed that 28 and it came towards the golden ratio in this 5-minute chart, and from here it seems to have rebounded. So we don't have to come directly and hit the line. We came very close to it, right? We have 20,274, and this is at 20,270. So we were 4 points shy away from it. So that's far enough. And we've seen how the market has made that nice curve, as we see, making a high, then making that low, right, which is basically this one so far, and from here rallying to the upside. So how much more of a rally can we expect? Well, so far we already made that percentage back to the 0.38%, and we're retracing so far. So can we come and say that, well, you know what, this was probably just profit taken from the ones that came in short from that high, right? And are we going to continue this move lower and just retrace the entirety of the move? So will that be the case? Well, we're going to have to obviously find out, wait and find out if we enter a trade, or obviously, is that enough of a movement, right? And we're going to continue the rally to the upside. That's the reading for the NASDAQ. So now let's look for possible levels of resistance. I like to use round numbers and then moving averages. I'm going to place 20,000 as my probable level of support. Now, another thing that you want to keep in mind regarding the NASDAQ. So remember that we have spoken about the retracement, that in technical analysis, 10% is a correction. So that 10% correction from that high of 22,317 was right about 20,000. So 22,317 times 10% minus equal 20,000. 20,085. So that was the amount, the value that the market will have to retrace the 10% for be a correction. The market did a bit more of that, okay? So now we are above that level. So will we have a continuation of this rally? Well, Magnificent Seven seem to be doing just that, and the Magnificent Seven stocks, they were the ones that really had pushed all of this, all of this higher. So if they're back in full swing, then we could probably come and say that, okay, there's another leg up prior to what the news will come in by Friday. So by Friday, if the news are negative, we already, traveled a percentage higher into profits, and so therefore, if we do have some bad news, we could probably retrace back to that correction level of 20,000, right? Or if not, we could just continue to move higher. So let's see what would the week will entitle. But so far, during this morning session, is to the upside. So today is a day to buy the indices. Look at the S&P also open with a gap up. I'm going to use the 50-day moving average as a possible level of resistance, and 59.50 around their level. Then 5,700 as my first level of support, and then that swing low as my second. That's for the S&P. For as far as the Dow Industrial goes, also it opened with a gap up. So let's use the 50-day moving average and 43,000 as my first level, because it's psychological round number right there. Right? As far as support will go, let's just use 42,350-ish, which is basically around where this high is. that wick was a rejection, so for some reason it was rejected. Then I'm sorry, crude oil. Let's talk about crude oil. So crude oil, okay, so 50-day moving average is going to be my first level of resistance in the top Bollinger Band. My second, I'm going to use a 20-day or obviously the inner Bollinger Band. The 20 is the 20-day moving average as my first level of support, and then $67 round number as my second. So the direction of it is continued last week's momentum to the higher. So let's just go with that. Buying. Then Nat Gas, I'm looking at Nat Gas to be in recovery mode. I'm gonna just tighten up the levels to show the lines, the 20-day moving average at my second level of resistance. And the first dynamic level of resistance is the 50-day moving average, which the market has fluctuated above that and retraced. So are we continuing this move lower? Okay, let's see if we are able to climb back up the 50-day moving average, and if it does so, then that $4 is going to be the first target. And if it does continue, then obviously we see a recovery. But obviously, if we continue to stay within this range for the next 15 minutes, you're most likely going to probably see a continuation to lower. So let's see what will happen. Gold. So gold last week was just on a tear, moving higher and higher, making all-time highs and whatnot. But okay, then after that it has retreated somehow. Now we came down today below our level of risk or support. So I'm gonna leave 3,000 as a psychological level of support, and then just use right around 29.80 as my second. Then I'm just gonna use the upper Bollinger Band, and then right around 30.48. I'm actually just a swing high, that wick, last week's wick. So that's where I'm at. Now I could probably see. I'm gonna speculate that gold is gonna stay within this range, Friday's range today. I'm looking at it for this just to be really doing something like this for today. So sideways choppiness, really just not much momentum volatility in it. Then we have silver. We need to lower our level of resistance, 33,400, and then 33,600, second one. I'm gonna leave that first level of support as it is, and I'm gonna just lower to use Friday swing low, or that wick. So for silver, I'm looking actually to make a bid on that, so buying. Then we have copper. Copper has fluctuated above 5 and stayed above 5. Okay, today it did open with a small gap down. It has been closed. The market has fluctuated above our first level of both levels of resistances. So therefore, should we use a new one? Well, we haven't really broken him, so let's just use. I'm just gonna tighten up the first level of resistance, but it's going to continue to be moving higher. So now $5 is going to be our first level of support, psychological value, and then the second one is just going to be that lower wick. So I'm long. Demand of copper is going to increment, so I'm long. Then Bitcoin. Bitcoin has finally made a nice parabolic movement and broken out of that range to the upside. So therefore, the 50-day moving average is going to be just too close to it, so that's going to be dynamic level of resistance. And then I'm just going to use the flatness of the upper Bollinger Band to be used as a probable level of resistance. 84,000, because it's a psychological round number, support for it. Okay, and then I'm just going to leave 82,000-ish. Let me see, right there, as my second level of support. So going long, buying. Then we have the euro. The euro, oh boy, the euro is just it's just tanking. So it closed below 109. The dollar index is picking up some steam there, perhaps. So we'll take a look at that. Then we'll have support 107, the 20-day moving average, and then as far as resistance goes, well, the first level is going to be that 109, and then the second, I'm just going to tie it up with these two levels here. So looking to buy. Pound, it had gotten pounded below 130, but it did open gap down, and so therefore I'm just going to use the 20-day moving average, 130 resistance, and then just 130.5, just to give it a 50-cent spread on that. Looking to go long. Let's see if the dollar index will have something to say about that, because if the dollar index happens to fluctuate higher, and I'm just going to use the 20-day moving average as a probable level of resistance, and then I'm going to use basically 103,200 as a probable level of support for the dollar index. Okay, if it does make a move higher above 104, we'll see pressure, continuous pressure on the metals, and specifically on the currencies. Have a great day, and I'll see you tomorrow.